In a space that is so divided, filled with tribalism, insults being thrown on a daily basis, misinformation spread far and wide, I often wonder when the industry collectively is truly going to take a step back and turn a corner with a focus on collaboration rather than this hive mind mentality that is leading us down the pathway to nowhere. So much time and energy is being wasted in fighting each other, many have really lost sight and the real reason this technology was created in the first place. If this same energy was applied towards collaboration, just imagine how much ground could be made in terms of actually realising regulatory clarity that will undoubtedly move this industry forwards to a place that we all claim that we want to see it reach. However, although leadership is certainly lacking and examples of collaboration is few and far between, there is light at the end of the tunnel. As much as it may pain the naysayers to hear, with so many choosing to remain blind to this fact, when it comes to leadership in blockchain, it's none other than Charles Hoskinson, who is doing more for crypto as a whole and displays a level of leadership that is in complete contrast to the false narratives and hate directed his way. Welcome back for today's instalment of Cardano Insights, where we track the all-important developments at the very pulse of Cardano and its ecosystem. So let's get straight into it. First up today, and we check in on warm sunny Colorado with an update from Charles in his recent visit to swampy Washington DC. He was attending a DC fintech event along with a number of regulators, including the CFTC, SEC and Department of Justice, to come together to discuss the regulation of cryptocurrency. Charles explained that at the core of the discussion, they collectively discussed the notion of sufficiently decentralized, how we can come to an agreement on whether or not a cryptocurrency is a security or commodity, and just how this particular issue can be resolved. As you know from previous coverage on the part of IOG, they're setting up a lab at the University of Edinburgh to form the Decentralization Index, which will be officially opened on November 18th. This will begin the process in measuring the level of decentralization for each cryptocurrency, starting with Bitcoin. During this update, and as expected, Charles made some really interesting points that I think goes a long way in demonstrating why the entire crypto space should be really grateful that he is present in these discussions and representing our industry. He mentioned that in many cases people tend to view blockchain technology as strictly a financial asset. However, in reality, it has profound implications for things like building resilient electrical grids, telecommunications grids like we see with World Mobile, use cases for example with carbon monitoring, supply chain management, voting systems, health record management and national identity systems, none of which have anything to do with a regular bank or financial institution. This formed part of one of the discussions that he had with regulators about broadening the scope of discussion surrounding cryptocurrency to come to the agreement that they do far more than just one thing. From this aspect, Charles seemed very positive in terms of the discussion that took place on this subject. He then mentioned the concept of American competitiveness. Since the emergence of the cryptocurrency space, this has created the incentive to train higher and attract people in high-value occupations like cryptography and certain fields of engineering, which, if they were to be outsourced, would result in these jobs going abroad. I think this is definitely a strong angle and topic of conversation to get the attention of regulators and build a shared incentive to collaborate in finding common ground, since this aspect alone in retaining these highly skilled and rare individuals are highly necessary for national security, competitiveness and innovation. Charles explained here that overall the trip was extremely productive and he found lawmakers to be extremely receptive with a view to genuinely move this forward in the right direction for the industry to self-govern, as long as the industry itself embraces self-regulatory organisations, standards and consumer protections, something I think we can agree Cardano has been making great efforts towards realising. Charles closed off with what may well prove to be another crucial driver for the US regulators to really take note of the importance of the cryptocurrency industry and collaborate to ensure a regulatory regime is formed that acknowledges the existence of the cryptocurrency industry and one that views it as a positive force, enabling it to thrive and continue to innovate. During his time in Washington at the Swiss ambassador's residence, the representative from the People's Bank of China delivered a presentation on the digital Bank of Yuan. He explained how strikingly sophisticated and already scaled the system has become. With over 40 million users, 10,000 TPS, and tightly coupled with some of their existing payment systems like WeChat and Alipay, it was abundantly obvious how they're bundling the social credit system with this digital currency, posing a very real threat to this spreading far and wide, where a money system will exist where just a small group of people have total control over billions of people's economic liberty. Worryingly, this is an extremely active project that has a great technology behind it, with over 40 million users in beta. Charles put forward the antidote for this is a cryptocurrency with properties that have liberty at its core. Now, I think even the most hardened skeptics of blockchain and cryptocurrency technology would become receptive to a technology that can directly fight the emergence of CBDCs, and Charles explained that the US has definitely identified the threat this poses, opening up a great window of opportunity for some positive advancements in some real regulatory clarity. Ultimately, for all the Charles and Cardano naysayers, take a moment to put some respect on his name and understand the great influence he's having in terms of representing our industry to move us in a direction towards a pro-blockchain future that we can all benefit so greatly from. For the full Charles update, see the link in the description below. Next up today, we're going to check in on MELD with a deeper dive into understanding their Neobank versus the traditional bank, MELD X, MELD Neobank and Electric Money Institution, and the MELD debit card, which I think provides a great scope on just how grand their mission is and what a great addition to the Cardano ecosystem they will prove to be when eventually deployed. So first off, MELD's Neobank aims to bring both blockchain and traditional financial systems to the consumer. MELD's Neobank is the first step for the fiat component of the MELD ecosystem, and that will have the ability to integrate blockchain technology and all the composability of DeFi tools and services. MELD has a grand mission to become the next generation neobank, providing an alternative to traditional banking services, which currently exclude people around the world, limiting their access to vital financial services. By leveraging both traditional and decentralized finance, the MELD ecosystem will offer a full suite of banking services that include payment transfers, lending and over-collateralized borrowing, currency exchange, and insurance. Many of these services will be utilizing blockchain technology and will make use of smart contracts to automate the processes. This will allow MELD to offer its services to a global audience, reducing the need for traditional banking infrastructure expenses. In addition to their focus on digital banking, a neobank has a number of advantages over traditional banks. These include lower costs of overhead, customer acquisition, more innovative products for customers, ability to adapt to customers' needs faster, and all of this banking from your mobile versus real-life branches. It is, however, important to note that a neobank is not without its potential disadvantages. These include no physical branches, so no face-to-face contact with customers, no checks and no safety deposit boxes. But with the goal of giving equal access to banking tools to everyone, the flexibility of a neobank structure, empowered through DeFi, greatly outweighs the disadvantages when compared to a traditional bank. Now to MELD X. Being a separate legal entity within its ecosystem, it has one job: to exchange stablecoins for fiat currency. Since MELD X will be the intersection of crypto and fiat, a money laundering reporting officer will play a critical role in operating the service. An electronic money institution is not technically a banking license. As a result, MELD will not operate as a bank directly. The key difference between an EMI and a bank is that an EMI cannot do fractional reserve banking or create or issue debt. This means that MELD cannot leverage your money to create risky loans. Instead, MELD gives users complete control over their assets and enables them with the tools to leverage those assets and build out their lives. With MELD X and the integration of an EMI, MELD will be providing users with a simple and hassle-free solution to the current problem they face when dealing with digital currency, access to fiat, and ultimately, the ability to be your own bank. An EMI is a service MELD requires in order to release debit cards to their users. MELD protocol users will be able to use their cryptocurrencies to purchase goods or services without having to cash out to fiat currency. The goal of the MELD debit card is to give customers financial control over their lives by unlocking the value of their cryptocurrencies. For example, through over-collateralized loans created in MELD DeFi protocol, which are then sent as fiat to the customer's neobank account and then allowing them to spend it anywhere that major debit and credit cards are accepted. An essential part of MELD's mission is for everyone to gain control over their financial lives and have equal access to financial instruments used by professionals, not just centralized institutions, governments, or the 1%. They aim to provide financial freedom and control to the masses, including the unbanked. As discussed in previous coverage, a long-term goal of MELD is to enable the 15 trillion that is currently locked out of the global economy, including 2 billion individuals worldwide that are either underbanked or have no access to banking services whatsoever. Access to these tools. These are the people that are paying the highest fees and getting the worst customer service, and they are the ones that are having the most societal problems. So, delving deeper into MELD's vision is to create an ecosystem that empowers individuals to regain financial control by providing them with the tools and services they need to manage their money on their terms. I think this goes a long way in demonstrating both why they chose to build on Cardano, being very much aligned to its core values, and also emphasizes the motivation behind their partnership with Axo, another project that aims to deliver financial tools that until now are only being made available to the very few. Finally today, and speaking of Axo, yesterday they announced a new partnership with IAM X Identity, a self-custody and identity management platform that we recently covered after their collaboration with NMaker, bringing digital identities to the NMaker Studio. So IAM X offers a self-sovereign identity service which enables users to manage the digital identities of individuals and businesses. IAM X can provide a digital identity for verification and transactions through SSIs without relying upon a central data repository. Users' identities are stored in IAM X's digital cross-blockchain wallet, enabling the user to store their identities on different blockchains that can only be accessed by authorized parties. This tool gives users complete control over how their personal information is held and used. In order for blockchain and the digital asset industry to advance beyond the present scope, Axo believe it must provide a streamlined user experience that any person can take advantage of without having to go beyond their technical comfort zone. To that end, IAM X's SSI system will provide a means by which a user's biometric data can be used instead of the traditional seed phrase to access one's assets. For Axo, this is an important first step towards developing full economic agency within the protocol. In the future, Axo expect users to be able to seamlessly trade assets on their own terms without needing to open a bank account or worrying about the dangers inherent to self-custody. They aim to make individuals their own sovereigns, full economic agents who voluntarily decide their terms for interacting with others. This partnership with IAM X is one step among many to ensure that the Axo protocol is a key player in the Cardano ecosystem and beyond. So that's it for today's installment of Cardano Insights, as we keep track of the developments and continue to spread those positive Cardano vibes. If you found value in the content and want to help me crack this YouTube algorithm, then please be sure to comment, share, like, subscribe, and hit that notification bell, which is the best way you can help support the channel. We'll be back soon with your daily roundup. Until then, thanks for watching, have a great day, and as always, keep it Cardano.